I called out to Silicon Valley. And I was like, hey, I'm trying to build an app, man. Can y'all help me? I'm just randomly calling people,
Yeah.
right? Or companies that build apps. And the guy said to me, he said, yeah, we can build an app. I was like, how much is it going to cost? He said, $300,000. I said, $300,000. I said, do I get the iOS and the Android? He was like, no, that's just for one. He said, but what are you building?
What is up, everybody? We are back for another episode of Outreach, and I got a very special guest. This is a childhood friend, so that hits near and dear to my heart. We got Mr. Kiley Summers. He is the co-founder, the CEO of SpenDebt, a FinTech company. If you don't know what FinTech is, we go get into that as well. But what's up, brother? How you doing, man?
I'm doing well. I'm on with the Paul Robinson. Yeah, I am. I'm feeling good, brother. It is certainly a pleasure to be on with you.
Yeah,
And let me say this.
yeah.
I appreciate the invitation. Thank you for just extending the olive branch. But more importantly, man, thank you for the work that you do. It does not go unseen, and you and wifey, you and Ed, man, y'all are killing it, and it's just I'm just glad to have a kind of a stadium view of what y'all are doing for the world, man. And so I'm glad to be on this podcast and just having this conversation with you.
Yeah, no, man, that is much appreciated, and ditto all of that, man. Those same sentiments back to you and your wife, man. It's I think it's a beautiful thing when you get a chance to do some meaningful work that has the opportunity to enhance the lives of others. In an area that, especially when you think about financial literacy and financial education and being able to make, wise financial moves, to do that with your life partner as well, man. And so definitely right back at you, man. But I want to jump into this because I think you have like an amazing story, with how you got to where you are today, what you're doing, and how you all founded the company. But talk to me a little bit about kind of your journey, because one of the things that, we get a chance to spend time on here, because everybody always sees, maybe what meets the eye, maybe what we have started, but there's a journey to starting every company, especially when, you are employed for a Fortune 100 company. You have a career and you have what would be considered, that's the pinnacle, right? Like you've got that career, you've got the education, you're starting your journey as a professional. But then you transition and you start your own. And there's a lot that comes with starting your own, man. And so talk to me a little bit about kind of a pivotal moment, or what led to you begin to address even debt, right? And begin to start this journey of founding SpenDebt.
Well, how long we got, Paul? We got about 3 weeks on here. Or what?
Oh yeah, we can do it. We can do it in series. This is episodic, right? So
Yeah, yeah. Oh man, that is a loaded question, but it's a very, very necessary and good question. I think, man, for me, it all started with at a young adolescence, and I come from a single parent home. And I watched my mother, do the very best she could for me and my brothers. I watched her rob Peter to pay Paul to make ends meet for us. But in that watching, that was my witness of her, but also the witness of her dealing with money. And you don't know what your experience is going to be until you get there. But just watching how she maneuvered and watching her deal with money, saying she had more month than she had money. You know what I mean?
yeah,
Meaning she had bills and they
yep,
just kept coming. And it was a struggle. You know what I'm saying? It was a struggle. And I think, she did her very best to take care of us. And got the opportunity to go to school, go to college and be the first in my family to do so. and graduate. I did
Yeah.
graduate, go to school and graduate. Let me
And
say that, and
graduate.
graduate. Um, but man, look, a year after graduating from college, working as an engineer, making good money,
Yeah.
all this stuff, right? It's two things that, aha moments. One is a phenomenal position to be in, to be the first and to do all of that stuff. But the second thing is nobody said it was going to cost. And the cost is having to buy things for the first time, right? It's the car, it's the obviously the residence. You got to buy furniture for the residence. You
Yeah.
want nice things in the, you know what I mean? Like it's
Yeah. Yeah.
all
Yeah.
this stuff. And before you look up, right, you didn't racked up all this debt trying to furnish your lifestyle.
Hmm.
Now, I made some purchases that I probably shouldn't have made.
Yeah.
However,
Yeah. Yeah.
I had to pay for them. But after all of the dust settled, and I looked up, Paul, I was in debt, brother. Me and my then girlfriend and our wife, shout out to Tylisha, my wife, man, we looked up and we was in debt, brother.
Yeah.
And together we had over 140 plus $1,000 of consumer debt. And at that moment, it was a realization. It's like, I'm getting ready to relive my mother generation. You know what I mean? And that's not what she was striving for early days, making, you know what I'm saying, making life for us. She was striving for us to be in a better position,
Yeah.
with all the things, particularly financially. And so that was that moment, that transitional moment, is just kind of realizing that my mom put everything on the line for me, and not for me to relive her life, is to be in a better position. So that was the pivotal moment at that time. Now, as time progressed, and after trying to become financially educated, trying to learn all the things about money, learn all the things about paying bills on time, trying to circumvent interest rates with
Yeah.
all the things, right? We got to a point where we learned this thing. Here's somebody out here listening to this
Yeah.
should use this. If you think about all the debts you have and you are just paying the minimums, you thinking you are good, and you probably are. And congratulations, because I'm glad that you're paying it. But here's a realization that I didn't have, and that realization was, if we just paid the minimums, Paul, on all the debt that we had at the time, the 140 plus $1,000 of debt, it was going to take us 44 years, brother. 44 years to pay it all off. We had a debt sentence of 44 years. But here's what we learned. Here's the lesson. The lesson is we learned the debt snowball. And the debt snowball says if you stack all of your debts from the smallest to the tallest, right, and pay the minimum on the second debt down to the last one, and pay every bit of extra on that first one, you'll begin this snowball effect. When we just aligned the debts and started that process, we turned a 44-year sentence into a 7.5 year.
So you
So
paid off 140 plus $1,000 in debt in 7 years?
in 7.5 years, brother.
Woo.
Yeah, yeah, seven.
Man.
And so, and just think about that. You know what I'm saying? Like
Yeah.
that was the one, like, just listing all the debts that we had, like, and just
So
pay the.
like where did you even start in terms of educating yourself about how to pay off debt once you realized where you were and what you wanted to accomplish? Where did you begin to turn?
I think this is another myth buster. There's another myth buster. The myth buster is particularly in the Black communities, because we always are so tight about talking about money.
Yeah.
We don't talk about money. We talk about everything else. We could talk about
Everything else.
we everything, right? We won't talk about money, but because we were in circles and we began to just we're just talking about money. It was a financial advisor, one of my wife's co-workers. He was
Yep.
he became my financial advisor. We were just talking about money and aspirations and all these things. He was like, "Man, I need some help." And Lord, like he came alongside us and partnered with us to help us. So the first thing is communicating that we had a problem.
Yep.
Will really kind of pull the cover back to for us and for him to come in and support us and walk this thing down with us.
Man, no, that's amazing. It's something that you said in there too, because right, of course, we traditionally we don't like to talk about money, and I think that's because it brings about this element of vulnerability, right? Where okay, well now we have to start talking about maybe what we're not as knowledgeable about, right? Or that we're not as we're not as sure of ourselves in that area of our life, and so it kind of strips away some of that persona, maybe strips away some of that reputation that you would like to have and preserve, but it comes at the expense of just your personal life, and it can come at the expense of your children's life as well, especially when you think about generational things that happen or that keep you in this cycle. And so if you can't grow, if you can't learn, then you can't share that so that your kids can do better than you as well. But also your circle that you keep as well. Like I think that's important. Like who you keep around you, and then having those open conversations, because you never know who's listening, you never know who's around you, you never know who somebody else knows, right? Until you start to really open up, lead in authenticity, lead in vulnerability, and then you begin, right, to get that help that can end up transforming your life. So no, I'm glad you brought that up, man, because I think that's something that we don't do
That's the
enough.
juice right there, Paul. The
Yeah,
the
yeah.
juice is we got to make sure that when we are communicating, we're communicating to the right people.
Yeah.
You know what I'm saying? And you could probably break this down better than I can. It's not about gossip. We're not
Right,
gossiping
right, right.
about our financial circumstance or situation. We're just communicating, hey, I have a problem. But it's communicating to the people that can have an impact on you, right? And that is, so it's communication, but also communicating to the right people that can really help you and assist you in your situation.
Yeah.
And I got a quick plug. A quick plug here is
Yeah, what up?
yes, I am the founder of SpenDebt. You said that, but we have a partnership with Advisors Give Back. If you go to our website at SpenDebt.com, it's at the top of the website. It's a banner. If you click that link, we don't get nothing from this, but you get access to a free certified financial advisor, where you can begin to have conversations with people about your financial future, about some of the things that you may be going through. But it's a free resource, and we want to make sure that we share that with people. Again, it's not affiliated with SpenDebt. We just have a partnership with them just to send people their
And what's that
way.
entity again?
It's Advisors Give Back.
Yep, Advisors Give Back. Okay.
Yep. So yeah, go sign up if you want to talk to somebody about your money. They will be happy to listen to you.
Yeah, no, that's good, man. So, as you're learning about financial literacy, right now you've got a financial advisor. You're on this journey, and you're tackling your debt. You and your wife are tackling debt in a way that is transforming not only your lives but your family lives as well, because you're learning. People are seeing what's happening, and it is unlocking doors to an entire kind of community that really doesn't have their wherewithal and that knowledge. And so now you're beginning to do this. When does the idea begin to come to the forefront about founding SpenDebt?
Good question. Now this is an unfortunate one, man. My dad, he had a massive stroke, July 14th of 2014, and at the time I was still working for PepsiCo Frito-Lay, but we was on the kind of the tail end of becoming debt free, and man, he passed away 30 days later, August 14th, 2014, and the top of 2015. I had went to my wife and I said, this is going to be a year of faith. I didn't know what that meant, but I just felt it in my spirit. And we committed to paying at that point. We committed to paying tithes. We could
Yep.
pay, like from that day to this one, like we ain't never not paid tithes, but that's a whole nother
Yeah.
topic. But
Yeah. Yeah.
just it was a commitment of faith. And my dad used to always tell us. He said when he died, he wanted all generational curses to die with him. And so I accepted that in the way that he wanted us to establish generational blessings. And so the top of 2015, I declare for my family and I that, hey, this is going to be a year of faith. In March of that year, I went to my wife. I said, babe, I ain't want to do it no more. I ain't want to do Frito-Lay no more. I was ready to quit. And so at the time, we had just found out she was pregnant with Elle. And she was like, quit. I said, what? I wasn't expecting her to say that. You know what I'm saying?
Yeah.
She just found out she pregnant. I know.
Oh yeah, I know that journey very well.
Oh my God, brother. She was like, quit. I'm like, okay. Man, it took me 2 months to build up enough confidence and courage to put in those 2 weeks and to walk away from the job. But even as a part of that process, Paul, I didn't know what was going to be next. I just knew I was just going out on faith and I was just taking the next step, right? And we took care of my father, in his last days, and we worked with the doctors and nurses. And I was like, man, we felt good going home every day after, leaving him at the hospital and in the nursing facility and rehab. I was like, let's just go do that. Let's go build an in-home healthcare facility where we can make families feel better about leaving their loved ones behind when they got to go do X, Y, Z. I was like, that's what I'm going to start. And so May of that year, I began to put the plans in place to go start an in-home healthcare business. And God nudged me in June of 2015. He says, hey, here's this witty idea. I didn't know it was going to be called SpenDebt at the time, but he said, I want you to help people spend money and pay off debt. And at the time, I was like, okay, let me call 3 people that I know. I called 3 people and I told them about the idea. I was like, man, don't do that. I was like, all right, cool. I ain't going to do it. And I just pursued, that summer, I pursued starting and launching the home health care. A good friend of mine called me in August and said, hey, man, the Urban League has this small business development university to help people with entrepreneurship. You want to come? I was like, yeah, I need to build this home healthcare business. Yeah, let's do it. The very first activity we did in this class, this 12-week program, was the Lean Business Canvas. One of my favorite activities when, helping somebody start a business, and even myself. I was like, you know what? I'm going to do it for the home healthcare. And then God was like, you need to do it for SpenDebt too. I was like, all right. Man, I struggled with the home healthcare, but I was breezing through this activity for SpenDebt. Now, the home healthcare was the primary. That was just what I submitted to the class, but the SpenDebt was just kind of secondary. So I was like, okay, cool. October of 2015, I called out to Silicon Valley. And I was like, hey, I'm trying to build an app, man. Can y'all help me? I'm just randomly calling people, right? Or companies that build apps. And the guy said to me, he said, we can build an app. I was like, how much is it going to cost? He said, $300,000. I said, $300,000? I said, do I get the iOS and the Android? He was like, no, that's just for one. He said, but what are you building? And so I proceeded to tell him what I'm building. He was like, oh, man. He said, I think you got some intellectual property. I'm saying, what does that mean? I was like,
what is that IP?
You got some IP. Now, I'm an engineer, brother, but I didn't know the language. I didn't know the business language. And so he was like, man, look, he said, if you serious, answer these 7 questions. And I was like, okay, well, shoot them. And he started asking me the questions, and I was writing them down. And I was like, I'll answer these questions, but I want to take time to think about them, and I'll call you tomorrow. He said, okay, cool. Man, I called him the next day, answer the questions. Man, we had this conversation. And he was like, man, I really like what you want to do. Think this would be good. And so after I hung up the phone from him, brother, I never talked to anybody else. And until I began to pursue trying to get some copyright or just try to protect the IP, man. But the beginning of 2016 is when we really began to pursue SpenDebt, and that's when it became a true company.
Yeah. No, that's an amazing story, man. And being able to understand, where God is calling you and the purpose that he has for your life, because that's always attached to it being beneficial, right? For somebody else. And so, when you started this, right, and you're on this journey, because I think it's an amazing company, but just how you guys do it as well, and the entire structure of SpenDebt. So, like, how does the micropayment system work of SpenDebt, just so that our viewers can understand that and know?
Yeah, no, it's a very good, valid question. I'm glad that we're taking a moment right here to do the commercial, Paul. What SpenDebt is, we are a financial technology company on a mission to help save millions of families from financial fatalities every time they swipe their debit card or have a banking transaction. And we're also helping companies recover account receivables using our micropayment solution. But more specifically, how does this really help the end consumer or the end user? Assuming, let's take Sarah. Sarah comes to our platform and she creates a profile. That's to know your customer information, your name, your email, and phone number. Then we ask Sarah to link the bank account that she wants to pay from, i.e. her Bank of America checkings account. Step 3 is we ask her to tell us the debt account she wants to pay. Man, she wants to pay her utility bill. The last step is we ask her to define a micropayment, and that's anything greater than 50 cents. So let's call it $1 for today's example. We do not use roundups. Although roundups work, we don't use them. So Sarah completed her profile. Sarah goes to Starbucks every day because she likes to get that strawberry acai refresher drink, and it's $5. Automatically, her $1 micropayment is added to that transaction. $5 goes to Starbucks, and automatically that $1 goes to her utility bill. And over the course of a month, we aggregate all of her transactions or the micropayments, and we send a one-time lump sum payment on her behalf automatically without her having to do anything to help Sarah pay down that utility bill. That is how the micropayments accumulate, and then that's how they turn into a payment on your behalf to help you pay down the debt that you are aggressively trying to pay down.
Wow, now that's amazing, man. I mean, when you think about just that business model, because oftentimes I think people do when they start to ideate around paying off debt, we automatically think about changing our lives, right? Like it has to be life altering for us to begin to address the debt that we live in. And we play that out in our mind, and it just becomes insurmountable in so many ways, But I think that's genius, man, to create a business model where it's like, hey, you're already spending your money here. Just allow that to pay off the debt that you have, right? And nothing really changes. And to be able to make those connections and have those partnerships where a person is still living and purchasing the things that they had been purchasing, and that's going to their debt as well. I think that's amazing, brother. Yeah.
I want to make the connection for people because people always ask me like, well, how does it really connect to, you being in debt or your mom? Like, here is the silver lining and how it all works together. And I didn't realize this till maybe like a year ago. I didn't realize I was really building SpenDebt for my mom. I was really building SpenDebt for my mom. And here's why I say that. We struggle to have access to financial tools or other financial resources, right? And so it just so happened God gave me his witty idea, and here we are. How it works in my life is I talked about the debt snowball, and I talked about paying the minimums on the second debt down to the last. Well, all the extra money comes from my SpenDebt. And that is applied to that first debt. So that is building that snowball. And so once you pay off all the first debt off, now you take the extra and you put on the second debt. So you're paying the minimum plus the extra that's going to help you pay down the second one. And this is how you build that snowball. But SpenDebt helps you do that without having to think about it. As you said, Paul, when I have to think about it, that's when a lot of things happen, right? You get anxiety. You stop looking at it. You don't want to see it. It stresses you out. All the things, right? But here is something that you can set it and forget it, and it's going to work in the background for your favor. And so that is how it is all connected. I built this for my mom because we used it as a very manual process to help us get out of that over 7.5 years. Now we can automate it with a platform and an app to help people do that without having to think about it.
Yeah, no, that's amazing, man. And even when you think about like what I started to think through, especially with you and Talisha starting this, right, and addressing finances, financial crisis and financial woes within the marriage is one of the leading factors to divorce.
Wow. Yeah.
And so just being able to strengthen marriages and relationships, right, by being able to help people address debt and spending habits and become financially educated and wise, man, I think, it strengthens relationships, which of course strengthens communities as well, and so, no, man, I mean, I'm seeing all of the connections here, of course, with it being generational, but just how it helps the family dynamic as well so much too, man.
Can we unpack that a little bit for the people? Because here we go. I love it. So here's why I want to unpack this.
Yeah.
I want to unpack it because here's myth number 2 is she got hers and I got mine.
Oh, come on now.
In the
relationship.
Yeah.
Unpack that. Yes.
Yeah. In the relationship. And we're struggling alone together. Just imagine a husband and wife are struggling alone together in their finances. Why? Because they haven't communicated. They didn't say, babe, I make this much and I got this many bills, but I am drowning to pay my bills every month. Where the other partner is making this amount and got a lot of surplus and feeling good, their credit score is through the roof.
Yep.
But they mate is suffering. And guess what? As a family, they're not winning.
Yep.
They're not winning. So here's why I want to unpack this, because we got to talk to our partners.
Yeah.
We got to talk to the person that we're doing life with. And I'm going to tell you, I was that one person not talking, suffering in silence, and my wife was killing it. You know what I'm saying?
Yeah.
But when we became one in our finances, that's when we got healed. Understand me? That's when we got healed. What Jay-Z say? The great philosopher says, nobody wins when the family feuds. And not necessarily a feud and arguing or fighting, but feuding like just with finances or one person is suffering, right? When we came together and we put everything down, man, that's when we started to work this magic. That's when we started. That's we turned a 44-year sentence into a 7.5-year sentence, right? And we did it together. And here's the bonus factor. Yeah, we became debt free, but this is what it unlocked. We talk about mental health. We became mentally healthy. We became spiritually healthy. We became physically healthy.
Yeah.
And it'll unlock a business idea for us. And we stopped exchanging time for money. It just changed the whole dynamic. So if you in a relationship right now and you got your money and she got her money or they got their money, y'all ain't communicating on finances, stop.
Yeah.
Because you think you're getting far, but you're not getting anywhere. When you do it together, you will accelerate that thing. That's just my truth.
No, that's good, man. I'm glad you got a chance to unpack that, because I think, that's the reality, man, for a lot of people who are in relationship with one another, because finances is hard for whatever reason to open up about. Again, I think things that that removes our our persona and the reputation that we like to have, that makes us feel a little bit vulnerable, man. Like those are just tough topics to open up and talk about and be honest about. Because we can talk about it, right? But are you telling the truth about it? That's the thing. That's the thing. And so
We from Missouri. And our
it's the
slogan
trophy state.
is "Hey, baby." So put that thing on paper. Don't just tell your
Yeah.
spouse or your partner. Put that thing on paper. Write it down. Pull the bank account out there. Show them what you're pulling down every 2 weeks. That's what a real magic. Show them what you're saving. I know your mama said, go and put that little nest egg away because you never know what's gonna happen. Like, oh man, like I get that, right? And if you communicate that, hey, I'm still saving this for a rainy day, that's fine. Communicate that too, but just be honest. And I promise you, your finances will reach another dimension.
Yeah, no, that's good, man. I even think about with adolescents transitioning into young adulthood, because a lot of times that's where you start to accumulate a large portion of your debt, because now you're an independent. You start to put things on a credit card or what have you, and you're transitioning into your career. And so I think it's even beneficial to go into adulthood, right, with that knowledge and understanding how you can begin to make sure that you can be debt free, and how to go into situations and purchases or what have you that you need to make, which is a part of adulthood and becoming independent, but in a wise way. And so just having that financial literacy, man, from a young age as you transition to young adulthood, I think is important too. Yeah. That's good.
Look, sometimes I get it, man, being young and you want the latest and greatest, man. But it's a 2-letter word that is so powerful, and that word is no. Sometimes we got to tell ourselves no. And I've been very guilty of not saying no, but it came with some consequences. So if you, and then right now you can get access to money, buying boots at Macy's online. You can get that buy now, pay later. And so here's the thing. Like, I get, hey, it's easy to pay those 4 installments, but it's a lot of people are defaulting on those 4 installments and then having to pay 30, 35, 40% interest on a purchase that they didn't really need.
Yeah.
And so be very cautious on how you are spending your credit. We already cautious on our cash, but even with our credit, because credit is not always a bad thing.
Yep.
Credit, yes, it can get you into debt, but it's good debt and it's bad debt, depending on what we are accumulating, what we are buying, what we are acquiring. So just, don't be afraid to say no to yourself, because it's not necessarily no forever. It's just a not right now. Timing is everything.
Yeah, no, that's good, man. That's good. So, as we wrap up here, again, I want to make sure that people, they have this information, they have this knowledge, they have some sort of CTA, this call to action, right? And so, for one, understand the debt snowball. Being able to go to your website, there is a partnership that you all have where you can talk to a financial advisor, just to start those conversations, to start talking to the right people who are in a position to give you the financial literacy that can help you begin to move down the path of transforming not only your life, but maybe unlocking some generational curses, and you passing that down to your family as well, so that they can move through life with the financial literacy that they need, which has so many other benefits, right, to life that you mentioned, in terms of mental health and stress. And of course, that weighs on your body physically as well. And so you see all of these different benefits. Is there any other things that you want to point our audience to, any other nuggets that you want to share, or any other advice that you want to give as it pertains to SpenDebt, or how they can kind of connect with your company, and what are the first steps after that? Is the first step is that they do talk with the advisors that you guys have the partnership with, or how do they begin to start setting up their micropayment so that they can begin to pay off debt?
Yeah, no, that's a very good question, man, and I appreciate it. So look, take advantage of the free financial advisor. You don't have to be a customer of SpenDebt. You don't have to sign up for SpenDebt. You could just go to SpenDebt.com and click the banner at the top, and it's going to take you to the financial advisor. And like, again, that is no affiliation to us. We don't get paid for that. It's just something that we wanted to have in place because we know our people don't have the person to communicate with about money. And so that is what blessed us in the beginning when we became debt free. So we know that is essential to building that financial education, right, and becoming very literate about money. The second thing is, people always ask, well, how much does SpenDebt cost, right? Look, the first month is on us. It's a free 30-day trial after you sign up. If you don't like it, you can delete the app. You can cancel your subscription. After that, it's $3.99 per month. What can we pay? People always ask, man, what can I just only pay my utility bill? Man, you can pay anything. When I say anything, it's a utility bill, your telephone bill, your rent, your mortgage, your hospital bill. You got child support. We can help you with child support too. We send the payments there, right? Student loans is a big thing that has reemerged in this new administration. Look, we can help you, get back good with your student loans. I would tell you this. True story. A gentleman had went to school for a semester and decided that after that semester he wanted to go home. Went home. His student loan bills came. Right. His student loans bills came and ignored them. But then that fall semester he wanted to go to a different school. He signed up for FAFSA, which is the kind of the federal assistance for college tuition, and they denied him. They denied him his financial award packet, and he asked why. Why did y'all deny me? They said because you ignored your student loans, and they said, if you would have just paid $5 a month, we would have granted you the financial package you needed to get back in school. I don't know what or who this story is for, but if you are ignoring those student loans and you think you want to do something later, stop ignoring them and start addressing them. And if it's just $5 a month you sending them, you're showing that you're making a commitment to pay. That is what we tell people. We help people make a commitment to paying their debt, or we help people accelerate paying their debt. And so we can pay any consumer debt. So if it's something that you want to pay and you just don't know, you don't feel like you don't have it in your budget, just use your behavioral economics, your spending habits, make it plain for you, your spending habits to deliver that small payment to wherever you're trying to send money to. And that is the call to action. Don't do nothing after you hear this. Do something. Even if it's just talking to somebody about your money, right? Because you may not even see it, in front of you on what you're trying to achieve or how to hit that goal. And they may be able to unlock a path for you. But don't just sit on the sidelines. You got to get in a game. You got to be very active. It's just more than looking at your Apple Pay. Did my money come from my paycheck? Right. It's more than that. You got to be investing into your 401k. If you're not doing that, you start investing today, like yesterday. Man, I can go on and on, but Paul, man, it's certainly a pleasure, brother. I appreciate the time to just share some of my personal experiences, but also share what we are building to just kind of help a generation as we believe to be better at finances, right? If it's not for us to see it, man, maybe it's for our children and their children. So thank you for the opportunity to share today.
Yeah, no, thank you, brother. It was definitely not time spent, but time invested, right? Where you get something back on it. So no, Kiley, man, I appreciate it, brother. Super proud of you. I know things are going to just continue to go, to different levels because it's needed. And it definitely changes lives, man. And so I appreciate it.
Thank you. Thank you.